How are we doing, guys? Hope everyone's having a good Easter weekend, enjoying a bit of a break. Seems like a long time away from the charts, doesn't it? Who's missing it? Come on. Hey, Steve, how you doing? So hopefully everyone can hear me okay. Just let me know in the chat. Yeah, it's more than the usual sort of 2 days away from the charts, isn't it? I hope people are actually like enjoying the break, you know? I know like it's so easy to just keep checking it on your phone, isn't it? It becomes such a like yeah, literally like a reflex action, doesn't it? You just keep checking it. You know it's closed. You know the markets are closed. But you keep looking, keep looking. Right, let's get a screen shared here. That's it's been nice. It is nice, isn't it? Right, let's keep that chat. Mm, 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 mm. You can mute yourself as well, please, guys. That'd be great. Cool, cool, cool. Waiting for a couple more. Right, let's get into it. So we are on week three. Hopefully you can see that okay. Week three, risk management. Risk management. Now, risk management is probably the single most important thing to making any strategy or anything work within trading. It's the foundation of any trading strategy, and I fully know that literally any strategy, doesn't matter how good the strategy is, will not work without risk management. Whether it is the building block of everything. Risk management. If you're not doing that right, if you're not doing that consistently, you won't see consistent results. So it deserves its own week. We'll see how long this goes on for. I'm hoping to keep it a little bit shorter than what I have been, over an hour. But we'll see how we get on. But first of all, last week's homework, and I'd like to know how people are getting on with that. So if you could just put it in the chat, guys, as we go through it. But obviously, last week I asked you guys, what was your biggest weakness, your biggest emotional weakness? So can we put those in the chat for a minute? You should have been writing these down every single day, just to bring it to the front of your head, just to make it vividly clear. This is my problem. This is my biggest problem. What is your biggest emotional weakness? Is it patience? Is it over wanting to be successful quick? So yeah. So rushing, so patience, basically. Um, Not actually kind of like trusting in the process, looking at that kind of like getting rich quick kind of thing. Any more? More than one out, a stop loss pisses you off. Yeah. So kind of that revenge trading, whether you're jumping in or not. But if it is actually giving you that emotion, then being able to step away from it. FOMO, not achieving as quickly as others. That's really interesting, Lucy. That's a really interesting one, actually. Not achieving as quickly as others. I can tell you right now, from someone that has been in the education side of trading for 5 years, everyone is different, and do not compare yourself to anyone else, because I have dealt with every single type of person with this, like literally, and it doesn't matter. Everyone's different. You cannot compare yourself. Like, that's kind of the one detrimental thing I see to a community of people learning to trade together, is comparison. What is it? Comparison is a thief of joy. It's so true, because like you see other people doing well and sharing results and sharing their wins, not sharing their losses so much. And you think, well, why aren't I getting this? Why? And it's a really annoying thing that really does mess with people's mindsets, because then they start rushing, then they start giving up on the patience, giving up on the all the things they should be doing, and they start trying to achieve, trying to be somewhere where they're not ready yet. And honestly, everyone's completely different. Everyone's completely different. Some people take to it a lot quicker than others. Like, they really, really do. Like, some people they just have more discipline in that area. Whereas a lot of people And the majority of people really do have to work for it. So yeah, don't I'm used to more like the FOMO in like in the actual trading, fear of missing out is in fear of missing that trade, or fear of getting stopped out of a certain trade or whatever. But actually like FOMO is in not achieving as quickly as others. I mean I would, just try and put that one on the back burner as quickly as you can, because everyone takes their own time, and that's kind of a very important thing, is to take your own time. Do not rush. Accepting a loss, trying to get a big account quickly. Yeah, again, not really trusting the process. So trying to run before you can walk. It's kind of what we're going to be going into today, is actually like, risk management is so important, because you want to be keeping the same risk every single time. Not having a winning streak, thinking now that you can risk more, over risking, losing, starting a downward spiral, and that very quickly ending you up in a really bad place. Feeling like it will bounce back after a stop loss and re-entering, so like hope. So yeah, so that kind of hope feeling, hoping it will bounce back, re-entering. Maybe there's a trade there, maybe there's not, that's been posted. But yeah, it's that again, that kind of comes under that FOMO, that fear of missing out. And realistically, it's a funny one. It's a funny one when you get on the other side of it, because like the trades never stop coming. The market never stops giving. Like you're never going to run out of opportunities. They just keep coming. But it's that kind of impatience, that FOMO, don't want to miss it, want it now kind of attitude. It really it repeats on you. You do it over and over and over again. It gets very, very boring of doing the same thing over and over again. It's like the first sign of madness, isn't it? Doing the same thing over and over again and expecting a different outcome. It becomes very apparent within trading. You do the same thing over and over again. You don't seem to learn from it until we start actually making some changes, start recognizing these things. Leaving profits on the table. Yeah, that's a very common one. And I suppose that's all again, hoping for more, greed. You've got all of them in there. FOMO, fear of missing out on more. All of them are in there. I have lost over and over again over many months, and I only had my first good week last week. Fantastic. Well done, Christine. No, that's great. I mean, honestly, like you start to like the power of some success really like hits a lot deeper than the failures. The failures can become quite monotonous, especially when you're not really changing stuff and you're kind of expecting a different result, until you actually start sort of knuckling down on the mindset side of things and actually start setting yourself, not just, the trading, like we said on the other weeks, like the trading plan is there. Like you just need to lock in up here. Like it's all up here. And every person's going to be different. Every person's going to need to find their own thing, their own path, their own way of stopping themselves from doing that thing that they keep doing. The common mistakes that everyone makes, it's going to things are going to work differently for every single person. And you've got to find you. You've got to find your thing. So a really common thing that people have done with me over the years is I've read a lot of messages from people, and they start. You wouldn't believe how many times this has happened, but people message me and they'll write me a good few paragraphs, and they'll start the message with sort of saying, they'll sort of finish the message sort of saying like, oh, I don't really know why I'm writing you this, because I know what's wrong, and just those few paragraphs has actually kind of like mitigated half the problem, because they've actually put it down on paper and they've written it out clearly in a message to me, where they've sort of said, and I read the message and I'm like, you've just explained your whole problem. And they've got to the end of the message and they've been like, yeah, I know what I'm doing wrong. That's a classic. I know what I'm doing wrong. Okay, well, let's fix that. Like, do you really know what you're doing wrong? And most of the time, yeah, you do. And it just comes to that putting that pen to paper or typing in a message, and actually the process of just writing it and then them rereading it is just like, fuck, like there it is. Clear as day. That's half the problem. We've admitted the problem. Let's fix the problem. Being cross with myself when I lose. Only been trading for 3 weeks. I need to realize it will take time to understand. 100%. Rome wasn't built in a day. Yeah, 3 weeks. 3 weeks is nothing in this game. But well done for getting involved. Well done for giving it a go. I genuinely think this is like a fixed mindset, growth mindset kind of thing. I genuinely think all the people that are in here and that are giving this a go are my growth mindset people, the people that want a bit more. They, you know, they're willing to try something new. They're willing to step out of their comfort zone and give something a go. So, you know, well done for getting involved. The potential it has is mind blowing, but it's completely up to you. It's completely up to you. I changed my life with trading completely. I'm moving to Spain in a few months, my family and all of us. And, you know, that's been my dream. And I can do that because I can trade. And that's it. You know, like that's the, you know, it's life-changing stuff when you fully commit. I know I'm doing wrong. I just can't stop doing it. Yeah, Lee, yeah, I know that feeling. Again, like I've explained before, it's not an overnight thing. Like you can seem like you're stuck in this constant repetition of doing the same thing over and over again. But one, just being self-aware of that problem, writing down that problem, sort of trying to step in between yourself and the action, so that split-second decision, and over a course of time, you're gonna start doing it less. When you apply yourself, it doesn't. I know it doesn't seem like it's just not stopping. It's just not stopping. I guarantee you're improving. You're improving in some way. Like, even if it's just on a self-awareness route, like it takes time. Nothing is a light switch and black and white. It takes, like, you're trying to change mental pathways that you've built up over years, you know, and how you think about these processes, and you're trying to now rewrite them to actually make it work for this, which is very different to like day-to-day life. And I suppose that comes with it comes with obviously what I just said, biggest emotional weakness. I mean, the mistake you repeat the most. I mean, I've kind of gone through those, and a lot of those are that mistake, aren't they? And I've kind of linked them to the emotion. So how did everyone get on with this number 3? Was there a rule that you promised yourself you would follow and you stuck to it all week? Did we have any success with that? Did anyone religiously or actually, you know, really give it a go? I'm not saying you would have done it 100%, but really pick that one thing that you just, you just did to your best of your ability. Sometimes I won't ask for help because I hate letting people down. That's given the time. Less trades at one time. Yeah, asking for help. My first few years trading, I mean, to be fair to me, I had no one to help to ask for help. I was doing it all on my own, and Jesus, it was fucking lonely. But even when there is help there, I was exactly the same, and I've always kind of been that sort of person, whether it was in learning to be a carpenter, coming up in construction, whatever. Like, I'd always try and struggle to get it done. It's an ego thing, it's a pride thing. But as I've got older and more mature, like, you know, if I've ever taught younger lads, like, I've always said, like, just ask, just come and ask me, whether that's on a construction site or with trading or whatever. It's like, just ask the question. I always make sure that people that like join my group or whatever, of anyone I'm teaching, I say, like, you know, from day one, if you've got a question, just ask. Because there's so many things, I think, in trading where you have, whether it's even just like a abbreviation of letters for something, or what does this do? What does this do on TradingView? Oh, what happens if when I press this button? How do you set a buy limit? Like, what is a buy limit? What is a sell limit? What is this? And it's just like, you can, if you don't have someone to ask, you can get stuck on those things for so long, and you can end up having a very important tool not at your disposal just because you don't want to ask. And yeah, I literally said, I said, there's no such thing as a stupid question in this. You may think there is, but I've heard everything. I've heard every single thing, and everyone has the same sort of issues, so it's very important. Like me, Jason, I know there's other people in groups that will help. Like, just ask the question, literally ask the question. There's been thousands of people before you that ask the question, and there'll be thousands of people after you that ask the question. So yeah, never let pride get stuck in the way. I stuck to Jason's trades and muted all others, and it's working for me. Fantastic. Yeah, well done for muting other groups. We do have access to multiple groups, and it's great to be able to offer that. But if people are in multiple groups, it is so important to mute other channels. Like, so important. They all have their own their own ways of trading. You know, you can't follow them all or even two at once. You know, it's just ridiculous. You you would have to be very, very experienced and be able to like literally just shut them off from processing in your head. So um I tried not to over leverage and it worked until Thursday and it all went out the window. Thursday was difficult. Was it Thursday? It was a difficult day. I was going to mention it. It was Thursday. It was the first. No, sorry. It's the 6 months I've been working with these groups is was the second losing day I think I've ever seen. I think the other one was a couple of months ago. So yeah, Thursday. I think it was Thursday. It was Wednesday or Thursday. It was a difficult day. I totally understand that, but I try not to leverage it to Thursday. But that's fantastic. You made half the week. You know, realistically. Yeah, and but part of what we're going to talk about now is not is getting to that bad day and not throwing it all out the window. You know what I mean? Being able to like, might have been what Wednesday actually. Yeah, well, you know, it doesn't really. You know, the days never matter to me. Then they shouldn't matter to you. Like it's called day trading, yes, but realistically, you should never be looking at your day profits. It should be a minimum of your week. How's your week going? You know. Start with Jason and cut down the noise. Stop being frightened of layering and bigger stop losses. Fantastic. Well done, Christine. I didn't take trade signals if I wasn't fully focused or I was distracted to avoid costly mistakes. Fantastic. Yeah, fantastic work, guys. Really good. Really, really, really good. And I mean, you know, going into next week, I got a little bit of like risk management homework, but like you really want to keep that going. You know, even if you're, you know, those things that you guys have been working on, apply them to next week as well. You know, just get that one rule, and if you can focus on one thing, see how you get on with that, and see how it starts improving, and then do that sort of for a couple of weeks, and you'll find things start becoming second nature, and you can sort of move on to the next problem, the next thing you want to fine tune. So, why most traders blow accounts? Common reasons: risking too much per trade, moving stop losses, revenge trading, over leveraging, trying to win back losses quickly. What are all of those problems? Risk management, basically, is what is going to lose you the money. It's all a risk management problem. And yeah. So I'm going to give you guys an example here. And this is on the very highest end of what you should be risking. Okay. So this is roughly around 5% of your account on a trade, which for me, I won't lie, is a hell of a lot. I never risk 5% on a trade. Like you would be lucky if you see me risking 2%. And that 2% only would be if I was quite confident in a position. And, you know, I'm talking about the sort of setups I look for when I trade personally. You know, something where I may have already risked 1%. The trade is still looking very good to me. I've had a bit of a pullback. I might go in for another 1%. But I would have probably by then mitigated my risk on the first trade, you know, so it would still be back with 1%. Now, I want you to, like, me and Jason give you guys a, you know, I'm pretty sure this is the same way Jason does it, but this is like a really basic rule of thumb for people that are sort of early on, something to have in the back of your head, you know, and it's really like you should never be going over these numbers. Like I think it's like if you are, it's outrageous amounts that you're risking. You know, and like I said, this is the higher end. So a £400 account, your maximum risk on one signal sent, one trade sent should be 0.04. And you're roughly going to be risking about £20 with a 50 pip stop loss. Okay. But obviously, again, it's going to vary if you've layered in positions, things like that. Like there's going to be a bit of vary, but we're just going to generalize and just say it's pretty much that. Again, that's 5%. Again, a huge, honestly, in my opinion, that's a huge amount of risk, huge amount. You know, I'm much more on the 1-2%, is where you should be, and you should never be going over it. So as you can see, like this is quite easy, and this carries on going up. But then as the account gets bigger, this does become ludicrous very quickly, and you can kind of work out where your kind of risk tolerance is. So like an £800 account would be 0.08, £1,200 account would be 0.12, £1,500 account would be 0.15, £2,000 account would be 0.2. And that's like your maximum. So, you know, say if we are dealing with a £400 account, and I can understand on a lower size account, this is probably what people are risking, you know, and they're probably opening 4 positions of 0.01 and trading like that because it doesn't feel like a lot of money and they're wanting to make a decent gain. So I kind of get the risking 5%, you know, and the account is relatively small, not the end of the world. You know, if you're losing 20 quid on a trade, you know, whatever, like, or losing 40 quid in a day, it doesn't seem like loads of money. And again, you know, going up to an £800 account, you might be risking 4 positions of 0.02, you know, to add up to that maximum of 0.08. So again, guys, like this is easy to remember. This is easy stuff. There's no excuses to remember. Like you just look at your account balance and you know what your maximum risk is in a trade. I don't care how you split it up. You know, you could do 8 0.01s for an £800 account if you wanted to. But realistically, I mean, for an example, who notices like within the group, within the gold standard, and I bet it frustrates you. I bet it frustrates you when the trader's telling you to move your stop loss by another 20 pips. And now what's that done? You're already in the position, right? Now he's moved that for a reason, you know, because of what price is doing, price action, and looking for where the trade is completely invalid. But now your risk has now increased. Say on that £400 account, from maybe £20 now up to say £30. So now we're seriously over leveraging. Now we're risking 7.5%. But this is why you should be dialing it back a bit. You know, it's not about, you know, this number should be the fucking maximum. This should be the maximum after, you know, just to allow a little bit of room. You know, if you're getting told to move a stop loss to allow for what price is doing. You know what I mean? So realistically, you should be dialing this down. Realistically, to be comfortable, you should be on half this. 2.5% risk. Realistically. Yeah, I found people lose faith in a position when he says that. I mean, I get why he does that. I fully understand. I get why he does that. And it's totally up to you. You could leave your stop loss in the same position, but you got to understand what I'm saying is like if it's annoying you and you're already risking 5-10%, and then you're, you know, over leveraging, over risking, not managing your risk basically, and then you get told to sort of move your stop, which we don't generally do, but it's obviously trying to, you know, keep yourself in the position because there is still a lot of bias of it turning around and going in the right direction. But realistically, if that happens, this is where you want to be, you know. So lowering that risk, and as well, it's not going to get you as jumped up. You know what I mean? Like all this stuff. Like if you're literally biting your nails at every trade, and scared of where it's going, what it's going to do, you're risking too much. You're literally risking too much. And when I say about like where your kind of risk limit is, you can't carry this on. You're not going to get to a £10,000 account and your risk be 5% and be 500 quid. You'd be absolutely insane risking £500 per trade on a 10 grand account. Realistically, you'd be right down to 1%, £100 on a trade, and you can compound that and make incredible gains. And that starts feeling like real money. You know what I mean? Then you can come out of a day and be like, you know, I'm £200, £300, £400 up, and that's money. Like that's decent money. I totally understand when you're down on this, a £400 account, and you're on 0.02 or 0.01s, and you're only making, you know, 35, £40 in a day. It doesn't seem like the sort of thing that you kind of expected it to be. But at first, that does seem great. But then you start doing it for a bit, and you're like, oh, I can risk a bit more. I've grown the account now. I'm going to go to 0.08. So now maybe this number's making you sweat a bit, making you bite your nails. Realistically, you're risking too much. Go back to this. Go back to this risk for this account. You know. So find that risk where you're comfortable. I used to do it like, you know, with a larger account, and like I went for a real big stage. of risking too much. And I wasn't risking a lot, but it was the numbers. I was still only risking 1%, but the amount I wasn't comfortable with it. I wasn't comfortable. When price came down into drawdown and I saw those figures at a minus, I didn't like it. And I had to find where that right figure was that I felt fine with it. So it's talking about what you're comfortable to lose. Never risk more than you're comfortable to lose. Like, you start doing that, you start taking emotion out of it. You start giving yourself a chance to not react with emotion. Maximum is a maximum, not a target. Just like a speed limit. Yeah, 100%. Maximum. And again, if you're risking this much, realistically, wind your neck in. Like, it's too much. Like, 5% is too much. Like, everyone wants to be getting to massive accounts. Everyone wants to dream of having a 100K account, a 200K account, £1 million account. But you're not going to be risking 5%. So let's start off as we mean to go on. You wouldn't believe how quickly you could compound a £400 account with just 1% risk. But the process in when the numbers are small, getting from £400 up to 1,000 is going to take time. Getting from 1,000 to 10,000 is going to take time. And I can tell you right now, the journey from like a 500 or £400 account to a 10K account is harder than going from 10K to 100K. So you need to be setting up those patterns that are going to put you in the big leagues. They're going to put you with the big numbers. What's the point in risking, in being in your low, small numbers, risking 5% on an account? You're just giving yourself bad habits. And then what happens? You get up to a big account, you get up to a 10K account, a 20K account, and your brain is now telling you it's still okay. It's still okay to risk 5%. I've always risked 5%. 5% is a scary amount of money. Where was it? So like this, for example, the power of small risk. So you have £1,000 account, you're risking 1%. You could take 10 trades in a row and they all lose. Like, that's a losing streak. And you've still got £900 left. If you're going up to, like, obviously this, the other way around, but like if you're taking 5% trades, you've only got 20 trades there. But we all know that losing streaks of 5 to 7 to 10 trades can happen. They happen. And realistically, if you have 10 losing trades in a row, it's unfortunate, but it does happen. And you're risking 5%, that's half your account gone. And it's probably going to be more if you think about it, because actually that kind of snowballing causes people to start risking more. Okay, I've lost two trades at 5%. Next trade, I'm basically revenge trading in, and I'm going to risk 10%. So you can kind of see how this downward spiral happens and how it starts. I've been 12 plus trades on one trade. Cool. But yeah. It's the power of over leveraging and over trading, and it's mad. And I'm a very big believer that you start off right, you end right. You want to get to those big accounts, trade a small account like you would a big account. Realistically, you're not gonna, like, why would you be trying to do anything different? You need to be, like, when you're on a small account, anything sub 10K, you need to be trading like you're on a 100K account, because you're setting yourself up. You're manifesting that position. Like, this is how I'm going to trade that big account. Yeah, 100% greed. I'm just trying to get there too quick. Like, this shit will change your fucking life when, like, with some consistency. When I say some, a lot of consistency. The trades that are in the gold standard, for example, I don't know the exact risk to reward on, like, obviously it depends how you layer in your position. It depends if we're hitting, all the way up into TP3, TP4, TP5. But I'm pretty much, just thinking about it in my head, like, I'm pretty sure that if you're hitting TP5, risk to reward is probably going to be around 1 to 3. If you've had 4 positions in TP2, TP3, TP4, TP5, probably around 1 to 3, right? Something like that. I might be wrong. But yeah, did you know if you're risking if your risk to reward is 1 to 3, you can lose twice as often as you win and still be profitable. It's mad, isn't it? You know, there's people that trade and trade their own systems and stuff like that, and they have very, very low win rates. They have like 30 to 40% win rates. You get swing traders that they're in trades for days, weeks, and they would have mitigated their risk very early on, well, as soon as they were like possible, and they're aiming for huge like risk to rewards of like 1 to 12, 1 to 15, 1 to 20. But realistically, finding those entries on those positions is difficult, and they'll have a 30 to 40% win rate, but they're still massively in profit because of their. But what makes it different is they stick to it. They stick to it over and over again. I'm not on this trade risking, risking my 5%. This trade risking risking double that 10%. Oh fuck it, I've lost both of those. I'm going to risk 20%, try and get it back. Right now, I'm in an absolute fucking hole, and half my account's gone. If you're risking 1%, like think about your days now. Think about your days. Think about like that losing day we had this week, and there was a fair few losing trades there. How different would your day have been if you had stuck 1% risk, 1%? What would we have lost? 5%, 5%, 5% of your account. Like that's nothing on the week. People are making 10% in a day. And if you're doing that consistently over 5 days, that 5% is nothing. It's nothing. Absolutely nothing. So yeah, remember this, guys. Like this is really important stuff. And again, this is on my fucking highest end. Highest end. Realistically, if you're struggling with emotion, thinking you've got too much on the table, you should be halving this. Halving this. This is your max limit. And this is what I want going into this week. I want anyone that's been struggling with over leverage risk management, half this number. £400 account, max risk 0.02. £800 account, max risk 0.04. £1,200 account, max risk 0.06. See how that goes. See how that goes. I had a friend actually that started this week, and was it this week? And I saw him a lot, and he had was it this week? It might be the week before. Can't remember. But anyway, he had a really good start. And he doubled his account in the first week, and he done really well. But I think it was the week prior, which was quite a good week. I can't remember. But anyway, that kind of sticking to the plan religiously, and he's done very, very well at it. But he hadn't really had any turmoil, hadn't really had a losing streak. As soon as he had a losing streak, like this week, he was like, "How do I withdraw? How do I get my money out? I need to take the money out, so I can't visualize it there." And I'm like, look. This is how you're reacting after a few losses. Losses happen. They're gonna happen. But protecting ourselves is the best thing. Lee, no, not one. Well, you can split it. I mean, this is the problem with a £400 account, right? Like the smaller account is because if we could split lot sizes into 3 decimal places, the smaller accounts would be a lot easier, wouldn't they? I mean, you could literally do micro fucking accounts. But realistically, for a £400 account, you can only do. And if you're going on that proper risk, you've got so much more option with like a 10K account, or like a bigger account. I'm not saying like you need to put more money in. I'm saying grow your account slowly, like and put in the groundwork and the rules from the start. So yes, on a £400 account, that is only allowing you to do 2 positions of 0.02, and that's where I can kind of, for a £400 account up to an £800 account, I get people risking 5% because again, losing it isn't going to quite, set you off emotionally because the numbers are still quite small. But realistically, once we're getting up to a 800, £1,000 account, then you really can be like half this risk. Like a £1,200 account, 0.06 should be your maximum risk. And that allows you to do 5 or 6 positions. You could do 6 positions of 0.01. Fantastic. Close one at TP1, TP2, TP3, TP4, TP5. and you've got one to leave open if you want, and layer that position. Fucking fantastic, fucking fantastic. And like I don't know what I don't know what that is off the top of my head. What, 100 quid? Like if you hit TP5, you know, that's fucking great. That's a 10% win, you know, like on £1,000 account. So like risk like it's mad. It is mad. Like I've done this for a long time, and you know I've been on my own sort of risk management journey. And I think when you're on the back end of it, when you're on the other side of it, looking back in and helping out newer people and stuff, and I get it. I get where people are at. But it blows my mind. Literally, like it's like, oh, like I wish I could just get into everyone's head and just be like, no, just no, it's not the way to get there. One day 5% and 4 days 10%. No more trades for that day, and accepting the gain has worked. Kept me out of trouble this week. Yeah, fantastic. And that's the thing on the other side of it. We talk about risk management. We got to think about profit management. Like like I said last week, like that whole God mode, the whole overconfidence, just as detrimental as like going deep into drawdown. And I can't stress enough, guys, if you're making 10% in a day, that's insane. And don't get me wrong, I hear the stories of people that have made 100% in a day, doubled their accounts. I just said it about my mate. But obviously, yeah, smaller account, £400 account. You're not going to have a 10K account and be doubling that in a week, are you? Because you're going to fucking lose at some point, like playing that sort of game. It's having a big account, trading with small numbers, grow your account that way. All you're doing is just putting money in the account and not risking your capital. Greed plays a big devil on my shoulder. Yeah, greed and management. It's something I had to say everything I had to work on. I did have to work on everything, but yeah, greed was a big one for me. It's realizing. It was realizing after a lot of trial and error that I'm not going to get rich quick out of this. And until I started treating it like an extra income, something that was going to help, something that was like, I kind of owe a lot to my daughter when she was born. And it was like that kind of changed my brain chemistry into being like, fuck, I don't want a fucking Lamborghini. Like, where would I put the fucking kid seat? Like it's like I just wanted to I didn't want to be at work so much. I wanted to be at home. What can I do to not be at home at work so much and be at home? Just give me an extra day. Just give me a 3-day weekend. Just give it to me so I don't have to work all fucking night or for all day and all night and not see my family. And that wasn't a lot of money. Um, that's best way I have people I need to tell off doing like people making 25. I get it. You come into this and you're like fucking 25% of the day, 50% of the day, like crazy. And it's mental, the potential, but you're not setting yourself up for long-term success with this. So yeah, like this is like vital stuff. Like anyone that is new, even not that new, but just like getting these things pictured in your brain, like in your mind's eye, being able to see these things. I have things. I used to have things that would burn into my brain, and I could see them. I could see the visual, whether it was something like this or that one I said to you guys about amateur trader and professional trader, like an amateur trading saying, did I win? And a professional trader saying, did I follow my trading plan? Fucking the first time I saw that, it scarred my brain and it stopped me. It stopped me jumping into trades, it stopped me doing stupid stuff. The other week I started Monday with 1600. By Friday noon, I was at 3K. And I should have stopped. Okay, come Friday afternoon, I blew all the money and I had made in the week and started back at 1600 the following Monday. Well, yeah. Good news is you're just back to square one. Like you're back to break even. Started back at So like, but again, like you're making 50% there. Well, actually, no. I mean, you 100%ed your account, didn't you? So you basically 100%. Mental. You're not gonna have a 100K account and turn it into a 200K account in a week and not expect to like have some serious problems in the future. You know, Yeah, till last Wednesday. Mental. That makes me anxious thinking about what you've had to go through there. And the nail biting and the things that sort of come with that. Like I said before, like you shouldn't I get trading is so I don't want to say like yes it is addictive, but it's compelling and you've got to be driven to make it work. But realistically, if you are biting your nails, sweating, getting pissed off when you're making a loss, cutting your risk in half or cutting it from 5% down to 1% is going to make a huge difference on that. But then you've got to be very mindful on the other side of things to be in like too blasé. It's all about it's about this. It's about three simple rules, and it's sticking to it. Not like oh I've just been stopped out of my 1%. Fuck it, I'm just going to go back in with 1% because it's only 1%. 1%'s a lot. Depending on the size of your account, 1%'s a fucking lot. £1 million account, that's £1 million account, that's 10 grand. It just depends on the size of your account, realistically, and to how much what money means to you. What does money mean to you? If you've got a £1,000 account and you're risking £10, £10 is a lot to one person and not a lot to another person. Find your medium. Find what makes you tick. Find your trigger. Three simple rules for risk management. Write these down. Take a screenshot. Take a picture of the screen right now. Put my ugly mug in it. Number one, never risk more than 1 to 2%. That doesn't say sometimes risk 1 to 2% per trade, or most of the time risk no more than 1 to 2%, or 97% never risk more than of the time, never risk more than 1 to 2%. It says never risk more than 1 to 2%. That never is so vital. You let it go even 1%, you're opening that door to yourself to do it again. You're every time you move away from it, you're moving away from consistency. And this professionals stay consistent, amateurs treat increased risk emotionally. We want to be professionals. What's the definition of a professional? Someone that earns money from the thing that they do. That's a professional person. They professional boxer, professional athlete. They earn money. That's the difference between them and an amateur. They are now earning money from this. We all want to be professionals in trading and earning money from it. So start doing the professional shit. And one of the biggest ones is being consistent. Being disciplined, consistently profitable traders. Doesn't even not even consistently profitable, but consistent. Because you can have losing weeks, but then depends on how much you zoom out. I've had plenty of losing weeks. I have losing months, but I still have my years still in profit. Because realistically, I look at it as a salary. How much am I allowed to earn this year? But it's very up and down. Number two, shouldn't even be a question. These are three rules that will change your trade. Just stick to them. I have set homework, but realistically, this should be the fucking homework. These three rules. Always use a stop loss. And you know what? Once you start making progress, once you start sticking to these consistency rules, always using a stop loss, never risking more than 1 to 2%, sticking to these rules, you start doing that for an extended amount of time and actually start seeing a profit curve. What I mean by a profit curve is we're just steadily going up instead of like this all over the place. You'll laugh at that one. You won't even believe that people still do it, but they do because people are new to it and they don't know. Blows my mind. I used to, when I was my first couple of years trading, again, I had nothing. I had YouTube videos. I had anything I could. I was just jumping into the market and losing money. And I was trading with no stop loss, thinking, yeah, I know what I'm doing. It looks like it's going to go up. It's got to go up. It's got to turn around at some point. No stop loss. Bang. £1,000 gone. One trade. Wicked. On £1,000 account. Cool. Oh, 100% loss. How mental is that? How mental is that? When would you ever put your whole business on the line for one job? You know, one, like you just wouldn't. Like it's just crazy. Utterly crazy. Always use a stop loss. Shouldn't I know I'm gonna have to keep saying it forever to people. Because I know people will still attempt to do it. But it's what protects your account, it's what protects your capital. You know, protecting capital, and the thing with like the lower risk, you know, protecting capital is number one goal. The profit, making money, is the secondary goal. You know, and the lower risk management, you know, risking no more than 1 to 2% per trade, it allows us to survive losing streaks. Because you've got to remember, losing streaks are going to happen. Losses happen, losing streaks happen. Like, if you can't deal with that, get out of the fire because they're going to happen. Okay, it's just how you deal with them. Being able to lose, being the best at losing, and realistically, if you've had a losing streak of multiple losses, it doesn't matter because you've only risked 1%. And oh, big whoop, I'm fucking down 6% today. Whatever, you know. Guys making consistently 10% a day and being able to stop it, put a cap on that. I've made 10%. Bang, mental. When I was learning to and actually becoming successful with trading, I was looking at 3 to 4% a week. Like genuinely, 3 to 4% a week was insane to me. And I was sort of like aiming for anywhere from 8 to 12% a month. It's what I was looking at, is what my goal was. So, you know, take from that what you will. Never increase. I feel like this is like as number 3, I feel like this is the biggest time that people throw their risk management out the window. It's increasing risk after a loss. And go back to like, you know, should be never increase risk after a loss. Reread number 1, you know, never risk more than 1 to 2%. There's no circumstance ever in trading that you should be increasing your risk after a loss. You know what I mean? It just makes no sense. Makes no sense for consistency purposes. So there is 3 huge rules there. Just do them. Risk management is the foundation of professional trading. This is what I said at the beginning. Risk management is the foundation of professional trading. Without it, every strategy will fail. And it's true. It's 100% true. Like you will, like every single strategy needs risk management, no matter how good it is, no matter how clean it is. So many strategies work, no matter what. It's just up to the person being able to implement it, stick to it. Sorry. But every strategy fails without risk management. Great traders are not the ones who win the most. They are the ones who lose the best. Anyone read Best Loser Wins yet? No. Best Loser? That's not what it's called. Best Loser Wins? Fuck, that's gone out of my head. Can anyone put the right name in there? Was it? Best Loser Wins? It's Tom Hugard. Best Loser Wins. It is Best Loser Wins. Sounded weird. Best Loser Wins. Tom Hugard. Incredible book because it talks about being able to lose, getting good at being able to lose and deal with a loss, shrug it off. Yeah, Best Loser Wins. Just shrug it off like it never happened. Go on to the next trade. Rinse and repeat. Execute. Like literally, trade comes in, execute, result. Trade comes in, execute, result. That's it. Doesn't matter if it's win or loss. Do the best you possibly can to just get into the trade, manage risk, and as quickly as you can, kill all your risk to then be in a position that you're either just you've already like ideal position. What is like ideal position? You've taken some profit. Your stop loss is now into break even or stop profit, and you've got 2 positions left on the table looking for TP5 for TP5. You know, that's your best possible position, isn't it? I've taken money and I could potentially get more money, you know, and that's it. That's your two options. Great, fantastic. That's where you want to get to every single trade. I know obviously sometimes it doesn't allow you to, but with proper risk management, it's not going to fucking matter. Homework. So just a little simple exercise, you know, and your account balance is going to change daily, isn't it? Okay, if you're actively trading, it's going to be changing daily. So every single day this week, write down, well, you'll know your account size. What is your maximum risk per trade? You know, and use the template I used before and go for that 5%, and that is your maximum. Remember that maximum, but realistically, you don't want to be anywhere near that. You want to be about half that because you want to allow for in case a position, the stop loss gets moved by the trader, you know, for whatever reason because of price action or whatever. And then, yes, okay, now we might be pushing up near our very, very maximum, but we're never going over that. Never going over that. And then number three, write down every time you over leverage this week. And when I say over leverage, I mean, one, risking more than what your account size is, risking over that 5%, moving a stop loss, as in making it bigger. Which what is that doing? As soon as you're moving your stop loss, now I'm risking 6%. Now I'm risking 10%. Oh fuck! Now I'm risking 15%. Now I'm risking 20%. That's all you're doing is is putting more risk on the table. Like if price is going to go in that direction, you want to be hounding that you get stopped out. Oh fuck! Like price is now like okay, it's chosen that direction and it's fucking going. Okay, maybe we might jump into 2 positions, maybe even 3. But if I'm only risking 1%, okay, I'm only down 3% now. And now I've jumped into the 4 position and now we're fucking moving. That's where the entry was. And now we're going TP3, TP4, TP5, made back that loss and some. You know? Or, you know, just through it moving quite quickly, I'm now back at break even before that, you know, before I lost that 3%. But with proper risk management, this is what's possible. So that third one should be quite funny for next weekend. I want everyone to write down every time you've over leveraged. And I literally, like, whether it's a dash, whether it's a note on your phone, 1, 2, 3, 4, 5, 6, 7, 8, 9. Put the number. And then next week we're going to see who's got the most. So yeah, we don't want to be the most. So obviously, yeah, less. Obviously less. But I'll try and see if I can think of a prize or a forfeit. But yeah, simple bit of maths for your account. It's going to change every day. So, you know, unless you're not trading, work out that maximum risk. And that's very, very maximum. Okay, so we'll look at that again next week. And then next week, we're going to be going into routine and discipline. This is my favorite word in trading, discipline. This is what everything else bears on. You know, the risk management we've been talking about today. What's going to keep you there? Discipline, you know, routine falls into discipline, being disciplined to stick to a routine. You know, again, I can't give you a way to be disciplined as a person. I can just open your eyes of what it means to be disciplined and, you know, give you some examples of things that are that work for people. And everyone's got to find their own route, you know, but hearing other stuff, hearing people that have been there, learning from peers, learning from other people, the things that actually got people locked in and actually made them start changing, you know, of all these little things that we've been talking about, all these little changes. It's good. Well, we'll call it a day there, guys, and we'll get ready for next week. But yeah, I hope everyone has a fantastic week trading. Stick to it. Stick to those things we've gone over today. Risk management is, again, such a huge pillar. So much bears on it. Like it affects so much when it comes to emotion and triggering all sorts. It's mad. So yeah, peace, guys. No problem at all. And we'll see you next Sunday, same time. But yeah, any questions in the meantime, please feel free to ask. I'll get the recording up as soon as I can. And have a good week. Take care, all.